We have completed 300 high liquidity zone trades. I will explain all the statistics in this video. So in this video, we are evaluating the performance of a high liquidity daily and 75-minute demand zones generated on 8th May 2024, and we are evaluating these zones in the live market of 9th May 2024. So even before we get into these zones, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training videos are available at our NeoStock YouTube channel. You just click on this community tab. And here I already provided a post having the details of all our training videos. And if you look into this link, this is a playlist to supply demand zone price action course. You just click on this link. It will take you to the playlist to supply demand zone price action course. So in this playlist, you have all the training videos. So far we have over 57 videos are available, and all the videos are placed in an order. All the training lessons are in an order. So what you need to do, just scroll down to the bottom of this page. So in the bottom of the page, starting from lesson 1.1, all the training videos are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this YouTube video description. So from the video description, you join at our Telegram channel. It will be helpful to you. Each time when we release a new video, we'll provide an update in the channel. Now let's get into our analysis discussion. And here I am showing you stocks near daily and 75-minute zones. So from here you can find the high liquidity zones. You can pause the video and you can go through this list. Anyway, I'll be showing you all I am analyzing all the stocks. This is the stocks near daily supply zone, stocks near 75 minutes demand zone, and also stocks near 75 minutes supply zone. So total we have identified 9 high liquidity zones from this list in daily time frame and 75 minutes time frame. Okay, here today we got a good number of stocks, around 5 stocks triggered, and they gave good profits. Not only that, we have completed 300 high liquidity trades during today's trading session. Out of these 300 trades, 261 are successful, because we are monitoring our high liquidity zones starting from October 2023. And out of these 3 HLQ executed trades, 261 are successful and 39 trades are stopped out. And if you look into the success rate, 87% is the success rate. So we are beyond our 80% success what we want to achieve from these high liquidity zones. And intraday ROI is 5.7%. This is slightly 0.3% below our average intraday ROI. Last 6 months data, we have 6% is the average intraday ROI, especially in the month of April, because of the global situation and there were some wars. All these reasons, the momentum in the market is not good. That's why it impacted the ROI. So that's why it's come down to 5.7% instead of 6%. But anyway, 5.7 is extraordinary. Anything above 2% is an extraordinary during the intraday. So this is the average intraday ROI, 5.7% for the first 300 trades. Now let's get into the analysis discussion. The first stock is HDFC AMC. This is a daily high liquidity demand zone. So we have a drop, 2 base candles and a rally candle. And this one is already fine-tuned. I explained in the previous video. So these are the 2 zones we fine-tuned. Look into the 75 minutes time frame. So let us don't discuss because this already we discussed in the last video. Let us focus on these two. So here we have a rally, two base candles and a rally. Again you have a rally, base rally. This is the first fine-tuned I explained in our previous video. So I am not focusing on this. This we already had a detailed discussion. So let's focus on this second and third fine-tuned zones. So here we have a 15-minute zone. We have a drop, 3 base candles and a rally. This is a 15-minute zone. And again here we have rally, 5 base candles and again a rally candle with a gap, pro gap. And these zones again fine-tuned with 5 minutes time frame. So this one I already explained in the previous video, so I am not focusing on this. Let us focus the remaining two. See here we have a drop, 3 base candles and again a rally and follow through candles. Look here, again we have a drop, a base candle and a rally candle. Observe here, I have drawn wick to wick. So this is the HDFC fine-tuned 5-minute zone, the bird eye view, the complete view. But let us look into today what happened. See, today we got a trade, a type 1 proximal entry. See, prices came, just reached, went inside, maybe 5 paisa or 10 paisa inside, and then see huge rejection again. And then finally it reached the 15 minutes target. The rally based drop, this is the 15 minutes target. And this is the way HDFC AMC has given 7,095 rupees profit, which is 7.1% ROI. But HDFC AMC is not limited with this trade. It has given one more trade. This second trade is a type 2 proximal entry. Now I have changed this zone to type 2 proximal. Now adjusted to type 2 proximal. This is the type 2 proximal entry. Earlier this candle at type 1 proximal. The low of this candle is at type 1 proximal entry. Now prices entered once again into this zone. During the intraday, again it gave second trade. But this time the target is the revised target, because see here 15 minutes drop based drop. So the earlier 15 minutes target is changed to the new 15 minutes target. Now you have to limit to this new target. So we got the entry. See again it reached the new target. The new 15 minutes supply zone target it reached. And this time HDFC AMC has given a profit 4,117 rupees. What about the ROI? 4.1% ROI it has given. See, both the trades together we got a very good profit and a very good ROI both together. And after that HDFC again violated this zone because already it gave 2 trades. This is violated. See the next one again it reached and it gave a trade. And it is slightly stopped out. But it is within stop buffer area. But here the problem is the target is changed to drop, 2 base candles and a drop. This is a 5-minute zone. So it reached only 5-minute zone. We are expecting prices should go up, but it didn't happen. See, prices were moving here and here only. At some point of time, because prices are not going up. Previously also I told you, when prices are not going up, at some point of time you need to exit. First of all, this itself is an indication. The zone is pierced. Again the zone is pierced. Next time it moved up. Somewhere in this 5 minutes target area, you need to exit and book the profit. Why? The reason is, see, the first candle is pierced. If it is pierced and moving up, okay, fine. Second time also pierced. Third time also pierced. Within the stop buffer only. But these many times, the zone is pierced and prices are not moving from the stop buffer. That means momentum is slow. This is the point you need to understand. You have to observe the momentum of the stock is very slow. And definitely at this 5 minute zone, somewhere you need to exit. If you missed it, maybe one of these candles you would have exited. At least you would have collected with your taxes, whatever the taxes you paid. With those taxes, you would have got small profit. You would have exited somewhere. If not here, in this candle you would have exited. If not in this candle, maybe in this candle you would have exited. Somewhere outside this your entry. Probably this is your entry. A little above your entry you would have exited. You would have got a minimal profit. At least some minimal profit you would have got. That would be good enough. Whatever the taxes you paid, the taxes you would have collected. Maybe you would have got some profit. That is a small profit or negligible profit. So I can consider this zone has given a no profit, no loss. See, lot of time prices moved within this zone. And lot of time the stock is within the stop buffer area. After that, this zone is violated because there is no momentum from this zone. Always remember, once a zone is violated, you should be very careful. Even though it is within the stop buffer, don't expect a huge targets. See, one time it is pierced and from the stop buffer area it is started moving up. Mostly it will reach your minimum target it will give you. Many times it will reach 15 minutes target. But multiple times prices are staying here. Better to exit the immediate 5 minutes target. See, first time, second time, 3 candles continuously, the zone is pierced. That is indicating the momentum in this stock is not good. Somewhere, at least in this 5 minute zone, you would have exited. That's why I'm considering this stock as a no profit and no loss for this particular trade. Next one is Biocon. Biocon is a daily high liquidity supply zone. We have a rally, 2 base candles and a drop candle. There were no fine-tuned zones in this area. The reason is prices moved more deep inside after that I will show you. See here, prices went up to here. Here a 75 minute zone is created. You have a leg candle, base candle and a drop candle. This is the way we can draw a 75 minute zone. Within that 75 minute zone, we have a 15 minute zone. Drop, base, drop. Generally, we don't take trade in this below this zone. But the most interesting thing here is drop, 2 base candles and a drop. The recent strategy we are discussing. Look into this fine-tuned 5 minute zone. I will show you in the 5 minutes time frame. See here you have a drop, 2 base candles and a drop. And this fine-tuned 5 minute zone is overlapped with this 15 minute zone. Where it is overlapped? A distal line. What does it mean? This 15 minute zone is created by picking the orders from the 5 minute zone. When it will happen, generally the 5 minute zone is having strong order flow. Such kind of things generally it happen. See this, a distal line of this 15 minute zone, this 5 minute zone is there. To bring the clarity, time being, let me delete this 15 minute zone. Let me show you only 5 minute zone. Because see, multiple colors mixing you are seeing. Sometimes we may get confusion. See here. This is the 5 minutes. From this 5 minute zone, 15 minute zone is created. And moreover, this 5 minute zone is inside this 75 minutes high liquidity zone. Of course, the 5-minute zone is also, but part of the 5-minute zone is inside the high liquidity and another part of the 15-minute zone is outside. See here we have a drop, base, drop. This entire base is outside the zone. That's why we are not drawing a zone outside the high liquidity. Always we focus inside high liquidity zone only. So many times we ignore outside the high liquidity zone. Many times I am saying the reason is there is a concept called dynamic entry buffer. Once you understand that concept, you will understand sometimes why we take zones just before the high liquidity zones. So here in this 5-minute zone area, we need to plan a trade. See today what happened? Price has entered into this zone and after that it came down. And finally reached the 15 minutes target. It gave you, this is the one trade opportunity. At 9:30 candle it has given. If you missed after that one more candle and one more candle, it gave you another trade opportunity. In case if you miss your trade in this candle, you would have got a trade in this candle. But finally it reached the 15 minutes target. So 5 minutes supply zone entry and 15 minutes demand zone target reached. And this is the way Biocon has given 26,500 rupees profit, which is 14% ROI. Extraordinary profit it has given Biocon. See, that is the power of these special zones. What is the special zone? 5-minute zone is the origin for the creation of this 15-minute zone. Such kind of zones are always giving good profits. Previously also we have seen. 14% ROI, very good, extraordinary ROI during the intraday. So this is about Biocon. And next one is Gujarat Gas. This is a 75 minutes high liquidity supply zone. So we have a rally candle, we have 1, 2, 3, 4 base candles and then a drop candle with hidden body. And this one again we fine-tuned. In the recent price action we fine-tuned. Previously prices went more deep inside. So in the recent price action, a zone is created, 15-minute zone. We have a rally, 2 base candles and a drop candle. So inside this again we identified 5-minute zone. We have a drop, 2 base candles and a drop candle. But the problem is the risk of the 5-minute zone is very high. So that is the reason why, to minimize the risk, because the risk is high. Generally we take entry in 5 minutes. We don't go to 1 minute level. But the risk is very, very high. So looked into the 1 minute. 1 minute is also good zone is there. That means the depth is, generally many times 1 minute depth is very small. But you see the depth of this zone good. So this is the 1 minute zone. We have a drop, 2 base candles and a drop candle. This is the 1 minute fine tune because it is having a good depth. That means good order flow is there. Strong order flow. See, many times 1 minute zones are very teeny zones. We don't know how strong the order flow in the teeny zones. But this is not a teeny zone. So definitely we can plan a trade. So today the prices went and picked up the orders and then came down and finally reached the target. And there is another reason why 1 minute zone order flow is very strong. See, previously the prices just touched the proximal, the one here. The proximal just touched and see the rejection. And the depth is also very high. That's why there is nothing wrong in taking another trade here. Some of you may think this is not a fresh zone. Yes, this is not a fresh because just touched and came down. Lot of depth is there in the order flow, depth is there. That's why nothing wrong in accepting a trade here. That's why see prices went a little more inside compared to the previous. Maybe who knows, maybe third time also it may work. Maybe this could be a high liquidity zone. We don't know. Anything is possible. But this 1 minute zone order flow is very, very strong. And pushed the prices to 15 minutes target zone. The 1 minute zone is the entry, 15 minute zone is the target. This is the way Gujarat Gas has given 18,250 rupees profit. And this is also given 14.1% ROI. Excellent trades in today's high liquidity zones. Next one is Punjab National Bank. This is a 75 minutes high liquidity supply zone. We have a drop, base, drop. This again fine tuned with 15 minutes drop, 2 base candles and a drop follow through candle. And again this 15 minute zone is fine tuned with 5 minute zone. We have a rally, base, drop. And this fine tuned area, the prices went inside, came very close, just 5 paisa before. If you would have added 5 paisa buffer, you would have got the entry. Those who did not add the buffer, 5 paisa buffer, you might have missed. Generally what we do, we place our orders before the entry, at least 5 paisa, 10 paisa. If the price of the stock is within 100 rupees, at least 10 paisa, 15 paisa buffer we will add before this zone. So that way your trade would have executed. This is PNB fine-tuned 5 minute zone at live market. And again it has given one more trade. Sorry, not one more, the same thing, but this is the 15 minutes time frame. I am showing you the chart from 15 minutes time frame. Here if you would have followed 1 minute, see the why I am showing you this stock, it reached the second target. You may ask a question, mostly we exited the first target itself. Yes, we exit, but the momentum is very high in the stock. Definitely if you add the 1 minute trailing stop loss before, because see, everything happened in very short period, the zone is violated. Next zone it reached and achieved the second target. Maybe you would have exited in the first, but those who are using 1 minute trailing stop loss, definitely you would have taken your target up to the second target. Or maybe using 1 minute trailing stop loss somewhere here, you would have exited a little above this. But I am calculating up to this second target. Second intraday trade, 31,600 rupees profit, which is 9.4% ROI it was given. The first trade is 14,800, 4.4% PNB. PNB fine-tuned 5 minutes entry, 1 minute trailing stop loss, stopped out target. This is the one. So this is the first trade. This is the 1 minute trailing stop loss. Here we exited. This is the first trade. Actually PNB has given 2 trades. So 1 minute is a stopped out trailing stop loss. So here we exited, we will exit. This was the trade. This was the trade. And then while coming down, it has created again a new 5 minute zone inside 15 minute zone. This is the point you should observe. See, we got a trade in this candle. This is a 1 minute chart. We got a trade. Prices were moving somewhere here, but they never entered into this zone. Please remember. Below the zone only, prices were holded for some time. If prices are entered into this zone multiple times, prices went into the zone, coming down, went into the zone, coming down, we would have exited somewhere here. But prices did not go inside. This is the trade we got somewhere here. But after that, prices didn't get into the zone. So definitely you will be holding here. A new 5-minute zone is created here. This is a 1-minute chart, but a new 5-minute zone is created and then pushed the prices down. And this is the way we got the trade. Trailing stop loss at 1-minute trailing stop loss, it is exited. And that way 4.4% ROI we got with 14,800 rupees profit. See, look into this. This is the newly created 5-minute zone inside the 15-minute zone within the high liquidity zone. And this newly created drop-based drop, this is the 5-minute zone, but I am showing you in 15 minutes time frame now. So this is the 5-minute zone, but currently the chart is in 15 minutes I am showing you. So we got 5 minutes entry again, second entry we got. The second entry, prices reached up to the second target. Either you would have exited in the first target or you would have exited. Anyway, even if you use 1-minute trailing stop loss, you would have exited here only in the second target. So that way the second entry has given 31,600 rupees profit, which is 9.4% ROI. See, whatever the maximum opportunities our stocks are giving, we are recording here. Sometimes you would not have captured these entire maximum profits. You might have exited a little before itself. But these are all the opportunities given by our high liquidity zone. That is what you need to understand. Next one is Burger Paints. This is a daily high liquidity demand zone. Here also we got a trade. So this is a rally. If you add the hidden body, this is a rally candle, base candle, again a rally candle. Rally, base, rally. So within this we have two 75-minute zones. We have a drop, two base candles, rally, again rally, base, rally. This one we did not fine tune. Second one we fine tuned. Why we did not fine tune? The 15-minute structure is not good here. See here, the 15-minute structure is not good. Because this is a ERC candle. Again another ERC. In between there are no base candles. Mostly these zones will be violated. Such kind of zones. Next one we have a drop candle, 3 base candles and a rally candle. And this 15 minutes we fine tune with 5 minutes time frame. Rally, base, rally. And this zone is already tested. This is a tinny zone. See, if the width is more, you can plan second trade. But this is a very tinny zone. When the zone is very tinny, better don't plan for second trades. Don't take risk. If it is a high liquidity zone, yes, you can plan multiple trades. And this is a perfect zone, drop, base, rally. This is already tested zone. Tinny zone also tested zone, so we don't plan trade here. See today what happened. This is supposed to be our target. This is a 15 minutes time frame, drop, base, drop. We got a trade here, but what happened? Our target is a revised target. We have a drop, 3 base candles and a drop. A new 15-minute zone is created. So that means this original target, mostly it won't reach. Unless if this is violated, it may reach. But we can't take that risk, right? So definitely you need to exit here. In this 15-minute zone. So this is the way Burger Paints has given 3,696 rupees profit, which is 3.2% ROI. If this new 15-minute zone would not have been created in the live market, probably prices would have reached here. It would have given us 6% ROI. But anyway, the newly created supply zone prevented our plans. Disturbed our plans. That way we got only 3.2% ROI in this stock. But anyway, profit is a profit. Hero Motors, next one. This is a daily high liquidity supply zone. This is the only one stopped out trade in today's trading session. This is stopped out. We have a rally, 3 base candles and a drop candle. This we fine tuned with 75 minutes. See, this is the ERC candle as a leg in, 1, 2, 3, 4 base candles, drop candle. Again here we have a drop, 2 base candles and a drop. And inside this 15-minute zone, we have again rally, 3 base candles and a drop candle. This is the fine-tuned 5-minute zone. But today the fine-tuned zone is easily violated. Our zone is stopped out. This is the way Hero Motors has given 1,582 rupees loss. Stopped out trade. And which is a negative ROI minus 1.2%. Those who can accept this much risk, their trade would have been stopped out. Because we know maximum up to 2% we can accept. Next one is IDFC. This is a daily zone. This is the leg candle. This is the one. Why it is a leg candle? Looks like a base. Hidden body. See, previous candle, at the hidden body. Now it is a rally candle. After that, 1, 2, 3, 4, 5 base candles and a rally candle. So this is the way IDFC zone is identified by our software. Now we fine tuned with 75 minutes time frame. So here you have a drop candle, base candles and a rally candle. Or you can also consider this is a huge wick ERC candle, this one. ERC, failed ERC candle, 3 base candles. That way also you can trade. After that, a hidden body. If you add the hidden body, it is a rally candle. Within this 75 minutes area, we fine tuned with 15-minute zones. We have a drop, 2 base candles, a rally, drop base rally. This is a 15-minute zone. And again you have a ERC, failed ERC candle as a leg in, 2 base candles and a rally candle with pro gap. And these 2 zones again we fine tune. So this is a leg candle, 3 base candles and a rally candle, follow through candle. This is one 5-minute zone, but we can't plan a trade in this 5-minute zone because it is already tested. See, this zone is already tested here. And here also we have a leg candle, base, rally. This zone is also already tested. Both these zones are already tested. So we can't plan a trade here. Leg in, base, rally. Anyway, prices did not enter into this zone, but we also did not plan any trade. And India Mart, we have a drop, 2 base candles and a rally. We didn't fine tune up to 5 minutes level. See, 75 minutes itself we stopped. We have 2 75-minute zones. We have a leg in, 4 base candles and a rally candle. Again we have a rally, 1, 2, 3, 4 base candles, again a rally. But 15-minute structures are not good in both these zones. Look into this 15-minute structure, worst structure. Easily such kind of zones will be violated. Even this structure is also not good. That's why we don't plan our trades in such kind of stocks. Next one is Navin Fluorine. This already we discussed. Previously, in the previous video we discussed, but that was a high liquidity, daily high liquidity supply zone. This one is 75 minutes high liquidity supply zone. We have a fine-tuned zone. We have a drop based drop. 15-minute zone is there. Inside 15 minutes, we don't have a 5-minute zone. So that's why we didn't plan any trade here. So these are the high liquidity zones and trades. Hope this information will be helpful to you. Let us all meet again in our next video. Thank you.